And let's talk about life after the big GST reset. You heard from the finance minister in her exclusive interview to us, talking about the GST structure, the benefits, and of course, talking about the tariffs as well. So still a lot of question marks at play, but let's take it forward. We've got Suvodeep Rakshit, the chief economist at Kotak Institutional Equities, joining in on the show right now to talk about his thoughts on the economy. Suvodeep, hi, great to have you today on ET Now. Morning, firstly. Just wanted to understand, what do you think is going to, what the GST rationalization now is going to bring on the table? Sure enough, it will fillip consumer demand, but can it really sustain and mitigate the impact of tariffs on the other hand?
I think the important bit is that the GST timing is opportune because it comes just after the tariff announcements were done from US. But we have to realize that the work that has been going on behind GST is not a 15-day affair. It has been happening over the last 1.5 years. It's just that the implementation comes at a time when the tariff impact could be hitting India. Now, if we go by the numbers, the broad numbers in terms of the impact on GDP could be somewhere around 0.3 to 0.5% from the GST side, which, again, if you balance it on the tariff side, and the worst case scenario that we are looking at, let's say 50% goes on for a few months, till the end of the year or beyond, slightly beyond that, you could have an impact of around 0.5% odd from the tariffs. But again, uncertainty is important to note here because we don't know how long that stays. But we know for sure that the GST benefit will be there for maybe a quarter in terms of a one-off impact, and then the multiplier effect, etc., comes in. So I think broadly it can balance it out. The long-term implications will depend how long tariffs go on, what kind of fillip does consumption see from GST, etc.
Right, but Suvodeep, with respect to tariff, help us understand what's the latest that you are gathering, because we just had that big network exclusive and interaction with Finance Minister itself, where she's saying that the 50% US tariffs will impact GDP, but not much. And alongside, we also have the commentary coming in from President Trump as well as Modi. So what do you make of all these announcements or all these takeaways that we get to listen from the big parties?
So, see, as a base case, we do not have the scenario that 50% continues for multiple quarters. I think it's for us, we look at it for the next few months. We are hopeful that the bilateral trade deal talks continue and we have a deal by the end of the year. So as a base case, we do not have a prolonged period of 50% impact. But if we were to think about the 50% impact, first of all, we have to realize that there are certain segments or certain sectors which are exempted and continue to remain exempted even under the 50% tariff. So the impact, on the exports is on roughly around 50 to 60% of the exports that we will be seeing. Within that, of course, there is certain destination diversification that will happen to whatever little extent that is possible. Some will be, price inelastic and hence can be passed on to the US consumers. And some of the exports will be routed through the domestic industry or the domestic markets. So in that sense, you will not have a complete wipeout of exports. You will have a impact of roughly, as I was saying, around 0.5% of GDP should be impacted on an annualized basis. Of course, half yearly or, depending on one quarter impact will be different, but annualized, a 0.5% of GDP will be impacted. However, I think it's important to, think of it from the perspective of the government and the negotiations, etc., that these are ongoing. There are many moving parts, and to that extent, I think from our perspective, we are taking a base case that the 50% does not continue for a very long time.
So to protect projections then, Suvodeep, what happens to inflation? Does it continue to hold on to the 8-year lows? And what happens to GDP? Would it finally make it to that 8% mark? We're almost there practically anyway.
Well, I think the 8% mark is not something that can sustain for a pretty long time. And we know the first quarter numbers, we have passed through those numbers, nominal GDP, deflator, etc. So I think from a base case perspective, just on the GDP part, and I'll just talk about the inflation in a bit, the GDP part, the base case of 6.5% is something that is pretty much achievable. The pluses and the minus around that depends on how much of tariff impact we have, how much of multiplier effect we have, not just from the GST. We also have to think about the income tax relief that has been given in the February budget, and which will also have a positive multiplier effect. We have not seen much of it translate, but again, along with the GST, along with the festive season, whether there is a cyclical or how much of a cyclical recovery do we have in consumption, I think that is important to note. On the monetary policy side, also we have seen 100 bips of rate cut that will pass through over the next couple of quarters, and that will also have a cyclical upside in terms of the aggregate demand. So there are multiple levers that are working for a cyclical uptrend in the growth. But having said that, I think a base case of 6.5% looks good for now. There will be certain quarters where we have seen, for example, the 8%. The second quarter should also be on the higher side, but not as high as the first quarter. And again, the third and the fourth quarter will depend on how much of tariff impact and how much of GST, income tax relief, etc., play through. From the inflation perspective, I think just from a mathematical standpoint, there is roughly around 80 to 100 bips of relief or decline that we can see in inflation from an annualized basis just on the GST part. From the tariff part also, if we end up seeing the exports which are not able to find a destination into the US market or to other global markets will be rerouted into India, and that could also have a certain disinflationary impact. And I think that will also play on inflation, which again, as we were looking at inflation trajectory, the fourth quarter of FY26, which is the Jan-March quarter, would have moved up on base effect towards a 4%, and from then on move closer to a 4.5% kind of a handle into FY27. Do we see with GST rate cuts as well as some of the tariff impact, indirect impact, etc., we could see some scale back in the estimates, and that should be roughly around, let's say, on an annualized basis, 80 to 100 basis points. We'll have to see how much of it is passed through, etc., and that will ultimately kind of give us a more, I would say, a sure figure in terms of how we are looking at the inflation for FY27.
And what do you think amidst these uncertainties RBI's action is going to be? It was 50 last time, or rather the time before that. But do you think the easing stance will continue?
Well, look, I think the FY27 inflation numbers play a huge role, because if you look at the way the RBI is looking at the forward-looking inflation, they are looking at a 4.5% inflation, somewhere around that, the handle of 4.5% inflation, and that kind of restricts the space. If we were to see actual inflation prints continue to surprise on the downside, which would also mean that at some point the FY27 prints will also start to look downward, the RBI will have space. Along with that, if you have headwinds to GDP, not just in terms of a base effect, etc., but also because of some tariff-related worries, whether there are some decline in the GDP print. And I think any print below 6.5% risks that, in terms of the RBI's expectation versus the actual. So all in all, I think there will be some space that will open up for 25 to 50 bips of rate cut. It's not immediately that we will see that rate cut come in, because of the forward-looking nature of RBI or any central bank, where they are looking at inflation of FY27. I think at some point in time, as we start to see inflation prints show up a downward surprise from what we have been expecting over, let's say, the next 3 to 6 months, there will be some room that can open up.
All right, Suvodeep, so good having you on the channel today. Thank you so much for taking the time out and speaking with us this morning.
Sure.